So good morning. Happy to open this sunny day and conference with you. So my name is Stefano Valvano. I'm a partner of BCG office in Milan, but I'm also responsible for SME banking in Italy, Greece, and Turkey. I've been in the industry for the last 17 years, and over the last years I focus on SME banking. I would like to bring some my perspective on this market, and basically I would like to talk about the market, how is performing the market worldwide. We do as BCG a benchmarking every year on the performance on the corporate banking worldwide. What do the clients think? Again, listen. Your clients, SME clients, in a panel on Europe, what they think about digital, their perspective. And third, what are the future opportunities, how we see the market will evolve. Okay, let's see these first numbers about the growth. Where the growth will come from in the next year. As I said, this is an estimate on the corporate banking revenue that includes all segments from small business to large corporate. The first observation, you see that the growth in what we call North America, Western Europe, Central Eastern Europe, so more advanced country, or where more advanced country is around 2-3% of growth. Much of the growth will come from more developing countries, Latin America, Middle East, and Asia Pacific, where the rates are around 6, 8, 9% of growth. So 65% of the global revenue growth will come from that country. And as you see, also the size of Asia Pacific in terms of absolute number and revenue is quite astonishing. Already that market is bigger than Europe, summing up Western Europe and Central European Europe. It's also a fact of the rates that are higher, but this is the reality already today. And most of the innovation I will talk about will come from Asia, because we see that from that market are, let's say, quite more innovative rates than Europe and US. But then let's talk about profitability. The first point, a statement is small is profitable. So if we look at the pre-tax return on regulatory capital, okay, what we call small, companies up to 30 million turnovers, in general, for the banks, generate a higher return than the mid-corporate segment. Why? It's all about cross-selling. So cross-selling, as you know, drives profitability. So in each segment, both mid and small, if you see bottom quartile and you compare to top quartile corporate banking divisions, as you see, the green part is the lending gets smaller, the cross-selling part gets bigger, meaning transaction banking, but also risk and investment banking, and the result is, of course, more profitability for banking. Third point, specializations pays. So you see in this graph, each dots are a corporate banking division. The corporate banking division that concentrates more on selected sectors, again, has a higher return on capital. Okay, this comes from US. As you know, US invented the industry specialization, but worldwide we have so many examples of specialization, and specialization drives profitability. This benchmarking includes about 350 banks in the world. And then if you see in each area, there are winner and a loser. So you can see Western Europe, North American, emerging market, the segment large, mid, and small, and each line are the best and worst performer. So in each geographical area and in each segment, there are banking, they are overperforming, they are above the cost of capital on a harder rate of 16%, and there are companies and banks that are below. In general, as I said, the small segment is more profitable than the large one. But what we saw during the crisis, the variance, the difference between best and worst performance widened. So there are banks that did better than others, and it took advantage during the crisis period. Let's now listen the clients. We've done a research, a survey that covers around 600 SME in Europe, and we have 4 key learnings. First one, main reason for a SME to develop a corporate relationship is about quality and the role of trust advisor from the bank. Second, digital, you will see, is important, is growing importance, but still for SME comes after, say, service and credit. Then if you go a bit deeper, there's a big appetite for digital and value-added service. You will see some numbers. So the SME are, of course, waiting for digital service, but they're also willing to pay for new services. And then if you ask them, what is digital for you? The answer, the main, most common answer is back to basic. We would like something as easy as Amazon.com. These are the numbers I was referring to digital capabilities. So 70% of this sample says it's a relevant factor. You see, it's before geographical coverage. It's more important, but at the top, and credit availability. I believe that if we do and we run this survey next year, digital will be even up in the rank, and at the end, service for the SME is kind of equal to digital. Will be equal to digital in the next future. The appetite for digital. Okay. So 60%, more than 60% says I'm willing to use a new digital proposition, more advanced than I have today. More than 50% say I'm willing to pay new fee for new digital proposition. What surprised me that more than 40% will be even willing to switch the main banking relationship for new digital proposition. So translating for you, there's a huge opportunity for you to, let's say, develop the relationship with your clients, develop new fee, and make more loyal clients with you. On the opposite way, there's also risk you can take in consideration. It's all about customer experience. You see on the left the keywords that emerge in the survey. So we're talking about, as I said, as easy as Amazon.com, single login in the page, better pricing, transactional lines. So this is the words that comes in mind when the customer thinks about digital. And if you see on the right, the top digital features that emerge in this survey are something that, I mean, it's quite easy if you think to your experience as individuals. We all know that it's not still the reality in most of the cases for SME. So we're talking about end-to-end online fulfillment, the possibility to have a single view, customer view, a single logon, and kind of all products accessible with one click. So this, as I said, kind of comes from your individual experience, is a simplicity, is a customer experience that drives digital experience as well. So which opportunity? So I believe that digital is changing already your traditional P&L view on this segment, from revenue to cost to credit and risk. And I believe that more and more we will see new KPIs and trends in the future to assess your business. First one, I use digital to enable DRM to do better business with advanced analytics to better understand the share wallet, but also the opportunity in your customer. And we have already some example of banks that are, say, migrating to digital or virtual RM, more than 20% of their customer base in SME, a small business. Second point is how I use the information to do a better pricing. So big data for pricing, meaning how can I understand, for example, the different sensitivity of your SME customer to the pricing that is related to the industry, but not only. How can I offer new value services? How can I use the thousands of information that you already have in your bank and use it to do a better offering and pricing? Of course, credit and risk. To take a real-time decision, but also how can we develop a predictive risk model using internal data, first of all, transactional data to anticipate a client default, but also external data such as socials. These are, as you know, a reality already for many fintech, but also for some banks. And of course, how can I use digital to digitalize the customer journey, including application of robotic process automation, and also offering same experience you're living as individual for SME, meaning 5 minutes to open an account or a credit line, as some Asian banks are already advertising this kind of KPI. So I believe that the transformation will be huge, and also the impact and the KPI will change in the future. This is an example of, as we call it, the RM office. This comes from Asia. Again, it's an application for the RM, for SME, where everything is mobile. So we believe the future of Salesforce will be of course, mobile. And this includes all the information on customer, on the dashboard, but also information on the markets that are, let's say, driven and also with some trigger given to the RMs and to the product specialists. There is also a way the RM collaborate with cross-team, and also is a way to, let's say, push for operating rhythm and Salesforce effectiveness from the center to the RMs. I already mentioned this, so this is another example of a service model and segmentation. So I believe that more and more we see this kind of example where, of course, there will be what you call your top clients and your customer base that are clients that have more potential or current revenue in the future. This will be, I believe, still served via a physical RMs. Then there will be more and more what we call digital mind. So there will be SME that by choice will be served by a virtual or central RM. And I believe in this case, the future is that the clients will auto-segment and will choose his target service model. And then there will be what we call the basic or let's say low potential customer, where that you will need to serve via a central platform, via digital, to reduce cost to serve. Okay, and more or less it's about 40% at the top, 20% and 40% as a magnitude in this exercise that I've done a year ago. Another things you should consider, I think, is pricing. As I said, I believe that pricing might really be your silver bullet to increase profitability in this segment. And this is a picture that I find in all the banks I work with. So if you understand, each point is the spread given on SME loans. And the correlation between the spread given and the rating, the profitability, the size, the client potential is very, very low. So basically, there's no correlation. Most of the pricing is given by the RM. And so you have a huge opportunity to address this and starting building up some advanced pricing tool that, for example, as I mentioned, consider not only the risk cost, but also the sensitivity of the different industry or the different customer to pricing. So you can differentiate, at least you can correlate your pricing to the real potential of the customer. And we had a potential upside in my recent experience of 10–15% of increase in pricing applying this new logic. And looking at the future, more a bit in the future, and looking at some example from Asia, I believe that the question for you in the future will be a bit different from today. So the first question is, who is the customer? Are we talking about a single company? Are we more talking about an ecosystem of corporation or on SME, where maybe we include both SME and large corporate? And what kind of product or services are you want to address? From traditional banking services to more new value-added services that you're going to serve in the market. Of course, everything will be digital offer. And just to give you one example, then I will close. This is an example that comes from India, where with this bank we have created an ecosystem for agri-food that connect the small business, the agricultural small business, with the large corporate that acquire the raw material. So basically, is a platform where the small business can, let's say, see the market, see the quotes of the products, but also sell his product directly to the large corporate, and the company, the banks manage all the payments, but also the banks can, let's say, offer loan facilities, working capital, looking at the transaction that a small business does with large corporate, use this information to do a better underwriting. So this is one example of ecosystem. We've seen so many in Asia, but also in Europe. Some banks are moving in this direction. Okay.